Hey everybody, this is Phil Town.
And this is Danielle Town.
Welcome to the InvestED podcast. We, of course, are deep into Warren Buffett, as you know. And we haven't really given a lot of time to discussing the Buffett meeting that happened in the first part of May. And we're going to talk about that today.
We got onto our Ulta focus and didn't exactly do the meeting right on time, but we're doing it now. Very important. And neither of us went this year, which was a huge bummer, and I felt really sad on the day. But it's okay. And it's just wonderful that we get to watch it so easily on the computer whenever we want. That's just amazing. Like for 30 years or something, they didn't do that. So you had to go in person to know what was said. So yeah.
Yep. And I'm not a, I'd really prefer to not to not be in a crowd. But so many rulers went this year.
What are rulers?
Met with Austin and Travis, all the Rule 1 students we've been teaching for all these years. Thousands and thousands and thousands of them have been taught. And there's an urge on the part of a lot of our students to just go and meet up,
Yeah,
and so we're thinking next year we're going to do it. We're going to get a venue and invite the entire database to show up in Omaha, which is 140,000 people last time I checked. So
okay,
it might be a pretty decent crowd, actually. I don't know how many will show. a lot of people. But I'll be there, and God willing.
Let's see. It's a big thing to announce a year ahead.
I'm getting ahead.
I feel like we should delete this section.
We're going to have to book it, and I'll come back and tell you if we're not going to book it. But right now, we're on to start booking
that's
rooms.
right, because all the meeting rooms and conference rooms get booked
they fill right up.
a year in advance. That's right, because for everybody who hasn't been, there's like basically every fund and manager and bank and service provider, and everybody goes to Berkshire not to listen to, some of those people go to listen to Buffett, but a lot of them don't. They just go to hand out their business card and network and meet with all the people who are all in one place for the only time every year. So yeah, there's a lot of those kinds of things around.
This has been a phenomenon for as long as Warren has been publicly discussing investing, which even goes back before Warren started publicly discussing it, of course, to Ben Graham's phenomenal book on investing, The Intelligent Investor, which came out in 1949. So really, from that point, there has been a group of people who are investing sort of Graham style / Buffett style / Munger style / Rule 1 style, which is essentially everything we've been talking about on this podcast for 8 years. And that group has managed to remain relatively small. It is not taking over the world by any means. And Warren has commented on this. He didn't comment on it in the meeting this time, but he's commented basically over the years on how amazing it is that you can talk about proper investing and the kind of investing strategy that actually works, and it doesn't require a high IQ, and it doesn't require a great deal of time. It just requires education on what a good company looks like, and then getting deep enough into it that you're confident to buy it and hold it. And yet very, very few people, relatively speaking, do this. And more people sort of follow Warren's general advice that if you're not going to learn how to do this, then just buy an index. And that's really kind of how the world has gone, rather than, maybe I should learn to do this. No, they're listening to, I'm not going to learn to do this. I'm just going to buy the index.
It stays small because it takes work and time and focus.
It takes work. But here's the thing. The index has worked extremely well. And really, for a lot of you, it's worked really well your entire investing life. The index has been essentially on fire since 2009, since early 2009, with returns, compounded returns, ballparking, I'm going to say roughly about 12% compounded.
And when you say an index, huge. Do you mean like a market index? SPY, S&P 500?
Big broad market index, and the NASDAQ's even been bigger, but the big broad market index SPY or the Dow, just on fire for, what is this now? It's 15 years, which is, I think, don't hold me to this, but I think it's the longest period of just continuous up, with it, with obviously a short break here and there, right? There was a little break in the market in 2011 with the big Greek bond crisis, and then there was a short break in 2018, and there was a short break in 2020 with COVID. Amazing how quick that came back. But that's it. I mean, there hasn't been an extended compensatory period that balances out the market that we have seen repeatedly in the last 140 years. And, the typical time period for a run like this is about 7 years. And we're now double that. So, and also the market has grown in price relative to value dramatically over that period of time, as it would if it doesn't really go down. People just continue to believe, oh yeah, I'm going to make money in this market long term. They keep putting their money into indexes. The indexes keep driving money into individual companies, which drive their stocks up, which drive up the indexes. And so this sort of circular logic of investing in indexes has resulted in the markets continuing to move up. And they'll continue to do so until people finally realize, oh, well, I just really can't make money in the stock market. And then it's not going to go up for a huge period of time to compensate, and this is what we've seen for 140 years, to compensate the overpricing that happens in a big bull market. So I would really expect we're getting pretty close to that now. Of course, I've been saying this for how long, right?
Yeah, and at some point Buffett you're going to be right.
Well, hold on, Warren. It's not like a stopped clock, though. I swear to God, it's smarter than that, But Warren Buffett has been saying the same thing since 2017. So I'm in good company here. Now we're a solid 7 years into this prediction that this is the last year. And we have been compensating for that by staying in cash. Of course, our view of how you handle that is you get in cash. And Warren is, as of the end of June, I think, at $200 billion. We're coming up
I wrote down $189 billion in reserve cash.
So he's walking his talk. And so for years now, we've been heavily in cash. And then we do what Warren taught us, which is really careful options trades to offset some of that cash. And then all of a sudden bonds started becoming 5%, so that helps offset having a lot of cash. But we're really tired of being a lot in cash and struggling to find wonderful businesses that are on sale. We found a few over
Well,
these
you're in
years.
good company, because he actually talked about if he had a much smaller amount of money, how he would do with that. Because somebody asked him about that
Let's
question.
start with this.
About what I just said? Yeah.
That's a good place to go. I love that.
Yeah, so one of the first questions was, I have it first on my notes. Maybe I put it first on my notes because I liked it so much. The question was about why he isn't using all of his money. And he said basically that they don't have a clue how to use it. He said, we only swing at pitches we like. Because we hadn't swung at the last two pitches doesn't mean we should necessarily swing at the third pitch. And then he went on to talk about, because the question was about how he had said once that if he had $10 million or something like that.
$1 million.
$1 million that he would make 50% per year. Right. And so he said, I wouldn't like to run $10 billion right now, which was interesting because there's a lot of value funds that are kind of in that area. Like they're not enormous, but they're not tiny. And he said that he doesn't see any more opportunities than we've found, which I thought was super interesting because the whole point of his previous statement was that with a smaller amount of money, you could find a lot more opportunities that you could put money in without moving the needle. And he's basically saying he's not seeing those.
Right. And Charlie has been saying for years before he passed away that it's not like it was back in the 1960s and 70s. It's just much, much more difficult now because one reason is that there's so much more transparency in the market and so many more tools that are being used as a result of the internet that it's really hard to find hidden gems, which is sort of the essence of
Which is,
early Buffett investing.
yeah, and that's great for the gems, by the way. It's really, really good for the gem companies. They get investment early. It's really
Oh
great.
yeah, they really do. And but you know, the question that came through was, well, what would you do now if you had just $1 million? Which I thought was really to the point. And Buffett said, you know, I would do this. Basically, he said, I'd do the same thing I did back in 1955, or I would
Yeah,
go
yeah, he
through
did say that. That's right.
all 20,000 pages of Moody's. He said, look, there's a transportation index or a transportation Moody's manual, 1,500 pages. And he said he went through that page by page, and he found all these cool railroads that nobody knew anything about, and he learned all about them. And he said, I didn't do it. I'm going to paraphrase. I didn't do it to make money. I did it because I was really interested in railroads and learning about railroads, and that leads you to making money. And
What do I always say? I tell people you gotta find what you're interested in, or else
Right.
you're not gonna keep doing it. Investing is not interesting on its own. Well, for some people it is, but for me it's not.
Yeah, and you just don't know where it's going to lead when you really dig into something. He basically was saying, like, some people are passionate about chess and some people are passionate about this other stuff. And,
Bridge.
And they're grandmasters and
Yeah.
they make terrible mistakes in other parts of their life. He said, you know, it shouldn't be that much different for investing. He said, you are passionate about it, so you do it. That's you do all the work. Because it's not really work, it's really fun. And so he said that, for example, one of the things that came out of his passion to just dig in on these 20,000 pages of Moody's was he learned about the Los Angeles Athletic Club, which is a little tiny company that had really, apparently, he didn't really say what the economic advantages were of it, but it basically obviously something he was interested in. And it turned out that Charlie Munger, this guy he had just met in 1959, was sure that no one else would have known about the Los Angeles Athletic Club.
Well,
And what a cool
I thought it was the
investment.
railroads. He thought nobody had heard of these little railroads.
It was the
was the
LA
Athletic Club?
Athletic Club, yeah, and that
Yeah.
Charlie, of course, Charlie lives in Pasadena, and which is near LA, and Charlie knew about this, and he was, I think, astonished that Warren Buffett, that anybody, much less Warren Buffett, who he's meeting, would have known about this as an investment, and Buffett knew about it because he was interested, and so Warren basically said, yeah, I could, if I was just working with $1 million, I could make 50% a year.
I
Absolutely.
think he kind of implied that, but he didn't actually say that.
Yeah, but I think he said it.
I think he
not
implied
say it,
it.
but
Yeah,
he
yeah.
implied it strongly.
Yeah.
That he certainly, and that's how you would go about it today. And we all looked at each other, we being my analyst team, we all looked at each other and went, none of us have actually done that. Actually read every one of these pages. And Warren said, I'm not sure what the equivalent would be today. You know, maybe it'd be the same thing, but maybe there's some other kind of thing. And we have all, I didn't start off having to dig through all those pages because I was networked into a whole bunch of deals. And it was just how it happened. I was meditating a lot after, while I was a river guide and so on. And I got sort of networked into the Transcendental Meditation community, which were all over the world. And it didn't take a lot of poking around before deals started coming my way.
Well, you're saying private deals.
Yeah, private deals started coming my way. And so that's how I got going, which is sort of an unusual kind of way to get into it. If you don't have that, if you're sitting, of course, at the time I was in Southern California, so it was, I can go back and forth in Northern. I had a lot of opportunities out there just because of the nature of where I was. But if you're sitting in Omaha in 1955, you might not have a lot of local opportunities. So digging through these pages was Warren's way of finding good stuff. And he thinks that they're still there, that there's still really great opportunities. Now, I've dug through all of the pages of other kinds of ways of other sort of companies that, like Value Line, that put together summaries of each company. Value Line does a one-page summary. and there's thousands of them.
Well, and I mean, what came up for me when he was talking about that, because it was the railroads, was the time that you dug into railroads and taught yourself about railroads, not through Moody's, but just through reading by reading a bunch of books, which might be the same or better, just depending on what kind of information one is looking for. So
Well, I think you
it's
do that,
essentially the
of
same.
course. No, I think you do that, but it's how do you come on to the thing to read about is really the hard part. And Buffett's saying you come onto it by looking through 20,000 pages of Moody's, one page at a time. I went through thousands of pages of Value Line, and it's very. Like,
you're saying how do you find
that thing to dig in?
Not
right?
the topic, but an actual company.
Yeah.
Got
so,
it.
for example, I didn't just dig into
You're
the
not
topic
going to get that out of a
railroads,
book. Yeah.
Right. I got onto the idea of Burlington Northern Railroad because I was networking with Warren Buffett. I like to say it like that because that makes me sound like I'm really somebody.
It sounds like
really
somebody
like,
who's
whoa.
really trying to sound bigger than they
really
were
are
at the moment.
Because when you're looking at all
a little
of
bit
the
braggadocious.
it's not even remotely true.
It's actually not braggadocious because it didn't happen.
It's
so
like
it's
idiotic.
just a full-on lie. Okay, let's move on.
Yeah, it's like BS is what it really is. But you can sort of claim it. A guy that I really like and who's, I think I can call Jim a friend. He's the guy that started Square, which is now Block.
Yeah, we've had him on the podcast.
Yeah, and
amazing.
And he's now became a member of the Federal Reserve in St. Louis. He just had an incredible career, and he makes the case that he had mentors, and some of them were dead. And I really like that. So I'm sort of just right now applying that same logic to networking with these great investors who are, because of my networking, are telling me within 90 days of doing it what they're investing in. And of course, what I'm talking about is the filings that they make with the SEC, which we all have access to. So this is just full of BS, actually. It was a lot of hype.
It feels like a lot of work to hype this up for no reason.
Well, it's just fun. Okay. I'm just talking. And here's the thing. It is like one of thousands of, there's thousands of these great investors. Well, there's thousands of investors, and not very many of them are great, to tell you the truth. But you can figure out which ones are great. And that group you kind of follow, you pay attention to as if they were calling you up every 90 days and saying, here's what I bought.
Yeah.
And here's what I sold.
I
that's
think
an enormous network of fabulous information. And that's how I got onto Burlington Northern.
The point of him saying, I just dug into railroads and this athletic company just because I was super interested, and I of course immediately, since we just did 2 episodes on makeup and makeup companies, because I'm just naturally interested in that, I was just like, whoa, like for me, I have never read about a railroad, and I'm vaguely interested in how transportation works, but do I want to read 15 books on railroads? Not really. But I would read 15 books on makeup companies because that's just interesting.
There you go.
So
there you go.
What's interesting about that thought process is, how do you, as somebody who's maybe just starting out, sort of decide or delve into what your interests are? Like, I couldn't have described to you that I'm actually interested in makeup before I started investing. I just sort of knew about it. It just sort of happened. And I remember we talked about stuff like, what could I look at? And the only thing I could think of was yoga, because that was like a sport that was like a thing that I did. But I think what happens as you get going with reading and with becoming connected to an investing practice is that those interests start to become bigger and clearer and much more obvious just naturally. Like, I always say to people, like going to the grocery store, you look around and you go like, oh, what stuff do I know about? Oh, look, I I obviously know about the skincare section, but doesn't everybody? But everybody doesn't.
I think that's true. And if you were to do it the way Buffett said to go do it, what he would do if he was had $1 million or whatever, is that you do start going through these pages. And those pages will tell you very quickly if you're interested or not. I mean, it is really obvious, at least it's been to me. If I start going through pages of Value Line and just reading a page briefly about a company, I'm over it so quickly if it's not something I'm interested in.
Yeah.
And really quickly, you can start to see as you're flashing through, and Value Line puts it into industry groups, right? That they're with. So you can kind of go through that and start to see companies that are like each other, and see if you're interested. And the interest will pop out pretty quickly. I think. I don't think it's that hard to get interested in something.
Yeah, I think that's what I'm saying is that it becomes more and more obvious as one practices investing what kinds of industries you have an interest in your normal life and in your investing life, because those aren't always necessarily the same. Like you can be interested in riding railroads but find railroad companies very boring. I don't know why that would happen, but let's say it happens. I found yoga companies kind of boring, to be honest. So it's
Me
not
too.
always connected, but sometimes it is. And I've just found that for myself, that it's often stuff I didn't really have an awareness that I even knew about, because to me it was obvious that I knew about that. And I just figured most people knew about that. And that's the kind of stuff that's the circle of competence that Buffett talks about. It's just like obvious
exactly.
to you. Oh, you don't read food labels obsessively? Like, doesn't everybody do that? No, everybody doesn't read food labels obsessively.
Right.
Just stuff like that. So think about what those things are in your life. That would be my advice to somebody.
So what's the next thing that Warren said that struck you?
Well, on this subject somewhat, I actually want to play an audio clip because I just thought it was very cute. And I thought, well, I might as well play it. Where he talks about kind of what we started with, where you were talking about the market overall and the macroeconomic situation. And he basically said, I don't try to do that ever. So I'm just going to, if I can pull it up here in a second.
So this is a clip about Warren saying he doesn't do macro.
Yeah.
You think this is a great clip?
I don't know. Are you prepared to hate it?
Come on, play it. Let's hear it.
I'm trying to. I'm pulling it up.
Oh, jeez.
Okay.
Dead air. Come on.
Well,
come on. Come on. Play it.
It's about 2 minutes. And I recommend waiting for the end because there's a good part.
Okay, good.
Yeah. Okay, here we go.
We missed a lot of things. And what we really regretted was missing something that turned out to be very big. We never worried about missing something that we didn't understand. I mean, why should we be able to, predict the future of every business any more than we can predict, what wheat yields are likely to be in Illinois next year? Well, not wheat.
Okay, I'm going to stop it there. So when I was listening, what I heard was, we can't predict the future of any business more than da-da-da. And I was like, that can't be right. And I rewound it. And what he said is, we can't predict the future of every business more than wheat fields, or basically more than anybody else.
Right.
So considering that we're talking about predicting the future, whenever anybody talks about the market, it's predicting the future of every business overall. And I just appreciated that he straight up, I think the question was roughly like, do you think that the period now is similar to any other periods right before a crash? Like, do you see similarities between now and before other crashes? And he was saying, I haven't really tried too much, and we never worried about missing something we didn't understand. So I think that takes a lot of that stress away.
Well, there are kind of two different things going on there, right? The first, the one you played, which I really like, is, stay focused on the stuff you understand. You don't have to understand everything. You just have to understand what you're buying. And since I think many times Charlie and Warren have alluded to buying, 4 or 5 things is plenty. I mean, Charlie's talked about this a number of times. It's like, if you buy 3 good things, you're there. You're done. And Warren has said, you should have a punch card with 20 possible punches for your entire lifetime.
Totally. But the context of that was the market as a whole and getting ready for a crash and whether he's like watching for it.
Right. Which is a second issue.
Yeah, exactly.
Completely. And that one, as we've said earlier, it's in this podcast, it's like, okay, well, Warren has been warning about this coming since 2017 and making the case that, we have one of these things every 7 to 10 years and it's really overdue. And now we're at 15. So by the end of June, he's expecting to have about $200 billion of cash, meaning cash and short-term bonds. And
yeah, but he hasn't.
If you're going to go put your money into something when it crashes, ultimately, you're going to be putting your money into a few things that you really understand.
Yeah.
Point being, you better understand a few things now. You better be getting ready now for the bad weather that's coming so that you can take advantage of it.
Yeah, well,
if you
I think
wait,
he's
you're
also.
not gonna, let me just finish. If you're waiting to learn this stuff and then prepare yourself after the market goes into a decline, then you've waited too long and you're not going to be in a position to be able to take advantage of this stuff.
Totally.
Yeah. Okay.
Yeah. I think his message is that, but kind of coming at it from the other angle of, I am not trying to make those predictions. I have all this cash because I can't find a great investment to put it in.
Yes.
Which is the same. It's the same outcome. It's just a different
I really love how you said
it,
though. It's like, if somebody asked me why we're sitting in cash, I'd say because we can't find something to put our money in. What Warren said was, we don't know what to do with it.
Yeah.
That's why we're in cash. Like, okay. Which is sort of the same thing.
Okay,
right,
I want to play
what's
the
next?
end, or this is the end of what I recorded anyway, but so he went on to talk a little bit more about like other crashes and what happened. But then at the end of that answer, usually Charlie is sitting next to him. Charlie is not here anymore. So Greg Abel was sitting next to him, and he refers to Greg a bunch of times. And we can talk about how Greg did in this meeting, but this will lead us into the Greg chat.
I just don't think that way. I just look at what I can do every day. Greg?
I'm going to have to use it. Nothing to add.
Okay, well, we'll go to station 2.
He's so cute.
Okay, so that was
And then
Greg.
everybody applauded. At the
Greg
beginning of that
being Munger.
answer, he said something like, oh, well, we'll see what Greg has to say. And the whole meeting, he was consistently, just the way he used to refer to Charlie, he referred to Greg over and over. And I actually thought, having seen Greg be up there now for a few years, and Greg has always, to me, this is just my impression, he's always looked very uncomfortable. And just sort of, when he's talked, it's been very like clipped and to the point answers. And I think he was really deferring to the two leaders there. But this year, with him being in the second spot there, he really seemed very comfortable to me. And he was giving longer answers, detailed answers. He was sometimes joking with Warren. Like, it just seemed to be a real shift. And I was curious what you thought.
I think what I think should be on our next podcast.
Oh.
Yeah, because one of the things that Warren discussed was what would happen to succession after Greg. And that got
that's
really
true.
interesting. So
that's true.
let's talk about that, because
Yeah.
I think that's really impactful on our view that we really want to be sure a business is something we understand, it has a big moat, and management that's talented and has integrity.
Mm-hmm.
Those are 3 things we want in a business. Those are the 3 things we want.
Yeah.
So let's talk about that one.
I think I should add here.
In terms of
that,
what?
Go ahead.
In terms of in terms of Greg. Let me spit it out. Just in terms of Greg.
In terms of Greg.
We'll get to that next time.
But for anybody who didn't watch the meeting, the big headline out of the meeting was that Greg will be running not only all the companies, but he would also like Greg to do the investment decisions overall, which was something he's never said before. Big deal, and really puts Greg in the top spot for pretty much everything.
You just stole my thunder for next time.
Oh, you said what happens after Greg.
Okay, fine. Now you all know Greg
You said what happens
is the man.
after Greg.
Well, we don't know, but we'll talk about it.
I thought that's
Okay.
what you wanted to talk about the
We'll
board.
talk about it. We're going to talk about Greg for sure. All right.
What a mess.
Time to go. What a mess. All right. We'll see you guys next week.
Thanks,
Mess
everybody.
and all.
Bye.
Bye.
Hi guys, thanks for listening to InvestED. If you enjoyed this episode and you want more information or to listen to additional episodes, visit our website at investedpodcast.com and sign up for my virtual workshop right there. Spots are definitely limited for this event. I'm not kidding, they really are. They sell out very quickly. So everything discussed on this podcast, by the way, is either my opinion or it's Danielle's opinion. And really important, it's not to be taken as investing advice because I am not your financial advisor, nor have I considered your personal situation as your fiduciary. So remember that. You're on your own here. This podcast is for your entertainment and education only, and I really hope you enjoyed it.